Good morning, everybody. It is July 5th, 2017. We are at the halfway point this trading year. Unbelievable. Welcome to MarketStream. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. This is where we take a look at all the action that's happened so far in the Asian markets. Now, the Asian markets have been open all week, and I hope everyone's enjoying maybe some time off this week. What we saw going into the long holiday weekend was a market that had been showing some tendencies of putting the bulls on notice. The weekend basically was quiet, and hopefully everyone's been enjoying some time away, or you've been peeking in, and hopefully you're watching a little market stream to get a little idea. But the overnight action was a little bit mixed in Asia, and there was a catalyst. North Korea had there were reports out that they were testing another nuclear ICBM, and that had pretty much all major governments on alert. It was condemned by the United States and South Korea specifically. Then they did a joint exercise with some missile tests of their own. Then we also saw that Russia and China came out and condemned the actions of the North Koreans. So there is some tense moments that are occurring right now on the peninsula. That had the Asian markets opening up mixed. As a matter of fact, there was a lot of flight for safety bid. As the session went on, cooler heads start to prevail. You saw that the Asian markets did finish up at its best levels. You look at the Nikkei here. This is the Japanese stock index. That finished up about a quarter of a point. Now, what I want to do is give you some levels on the ETFs that you can watch here that traded during our market hours here in the States. And EWJ tracks Japan. So you can take out a pen and you can put me to task on this. But basically over the next 163 days, which gets us through the end of December, EWJ is pricing in a range of between $58, and as a matter of fact, if I scale out a little bit more, it is pricing out with a 68% probability of $58 top. That's the top of the range being priced in, and $48 on the bottom. Okay, that's the range. It's basically a $5 range, or a little right around almost a $5 range. It's around a 9% range being priced in between now and the end of the year for this Japanese ETF that tracks the stocks that are represented in the Nikkei. Now, of course, if you start to hear that VIX overall is starting to shift, or it shifts in the EWJ product, well, then that means that range is going to expand or contract based on that. Now, implied volatility right now is very low, and specifically it's low in Japan. The rank is actually at 12%. What is that telling you? That basically is telling you over the last 52 weeks, the expectation of big violent moves, there isn't any. So we'll keep an eye on that. Now, the Shanghai Composite China, the Caxian PMI number came out. It came out a little bit lower than expectation. Expectation was around 52.6. It came in at 51.9. Now remember, when you start hearing PMIs, the one thing that you want to remember, and those are the purchasing managers indices. Those are the purchasing managers that go out and they say, well, we expect that we're going to either be really active and going to have to buy a lot of stuff to produce the goods or be able to deliver the services that we have. If you see a PMI number above 50 or higher, that means that there's an expectation of expansion. If you start to see PMIs get below 50, that's telling you that there's a contraction in the expectation of, growth. And so with that number still over 50, there is that expectation of growth in China. The PBOC also said that they were going to be prudent as well as neutral with their monetary policies. And so that basically got the market moving to the upside. You had the Shanghai Composite finishing up. Best performing index in Asia, up a little over 0.7%. Now, FXI is the large cap ETF you want to keep an eye on here in the United States. That's where it trades during our market hours. That has the large cap Chinese stocks in it. And FXI right now is pricing in a range of right around $35 on the low end and $45 to the high end. That's a 12% range being priced in between now and the end of this year. So it's a decent range right now with the underlying trading at $40. So you have 12%. So that's a little over, right around $5 being priced in. Taking a look at Hong Kong, the Hang Seng basically finished up in the green 0.5%. It's in that zone right here. I call it the battle zone between the 20 and 50-day moving average. Insurance names were really moving to the upside. And for the remainder of the year, taking a look at the ETF EWH, which tracks the Hong Kong stocks, it too is in that neutral zone, or what I call the battle zone, where the bulls are battling right now to continue to have control. EWH right now is pricing in a range of between $21 and $25 on this $23 underlying. So you're basically seeing a 10% range for the remainder of this year being priced in for this ETF. This is very helpful information from a strategic approach. If you're seeing that there's basically about 10 to 12%, or let's say 5 to 12% of potential range in a stock, that really helps you look at where is it today and where is it forecasting to potentially go for the remainder of this year. This can help you understand, do I start writing premium against my long holdings? So if I'm long stock, do I sell calls? If I were looking to buy this underlying because I wanted exposure to this area of the or this region or this sector, is there enough price range to really make sense? If it only has a 4 to 5% price range, buying the underlying, outright for a core portfolio holding, if you're a bull, does that make sense? And so that helps you give some context. Taking a look lastly at India. Sensex finished up 35 points. That's good for a little over a tenth of percent. India has been grinding, and there has been some challenges, but the longs have been able to get above that 20-day moving average, that green line right here. Now, if you look at EPI, for the remainder of the year, EPI is pricing in a range of basically between $21.50 and $29.50 on this $24.60 underlying. This is an ETF that tracks the Indian stocks, and it's a pretty decent range. And it's right now, the 50-day moving average is in play. It is settled, the EPI ETF has settled right on that. So the bulls, while we're under pressure, are still trying to fight back, but there could be a little bit of a trend shift, knowing that they're pricing in the rest of this year basically a floor of around $21.50. That's where, with a 68% probability, you're looking at $21.50 to $29 and some change. That's a decent range on this ETF. We'll keep an eye on that, but with the volatility still very low in India, it seems like that's a very large range, but it could get much larger if, in fact, volatility does start to rear its head with any type of uncertainty that comes up in the trading world. All right, folks. Well, I've given you some ranges that now you can think about on these ETFs that trade here in the United States during our market hours. So now you have some context, and you now have something that you can take away and potentially start setting up some of the trades that we talk about on a daily basis for your portfolio. All right, I'm going to be back in about 20 minutes, and I'm going to be talking about all the action that's going on in Europe. So we'll see you here at MarketStream.